Hello, it's Chad Payne, investment advisor with Security First Asset Management, with our weekly market recap for the week ending May 12th, 2023. Hope everyone had a great week last week. We took a little bit of a break. All the advisors were in a conference out in Dallas, Texas, so we didn't get a weekly market wrap sent out, but we've got one this week. But first, a few announcements. We've got our referral program going on for the second quarter of the year, and we've got a $100 gift card for TJ Maxx, Marshalls, or Home Goods. So make sure, just send friends or family our way, and we'd be glad to talk to them and get you guys in a drawing for those gift cards at the end of the quarter. So also, we've got another event coming up on May 25th on Thursday in our Macon office for alternative investing, the truth about investing in gold. We've had a lot of clients inquire about gold, and we've got some facts for you and some history on that we're going to share with you. So look forward to having folks come out for that. We've still got some spots left for that. Let us know if you'd like to come to that on May 25th. Okay, so last week in markets, markets were mostly mixed. We had technology was up overall for the week, heavily in the NASDAQ area. AI was a big part of the discussion. A lot of people have been throwing that out in their conference calls that they're using AI or planning to use AI, and it's kind of jolted the industry a bit. A little bit scary too when you start looking at what this new AI technology can do. But overall, the Dow was down for the week, mainly due to a decline in Disney. They've had some a little bit rough go on their earnings, and subscribers are down in Disney Plus. So also the financials were a drag on the S&P 500 and some of the Dow as well, with regional banks still kind of in the focus. And we're not sure if we're out of the woods yet on some of these bank problems that we've had, and trying to make sure they're not systemic throughout the whole system. So overall, though, we did have the CPI inflation data that came out last week. It was down a little bit, still up 4.9% year over year, but still been trending down for multiple months in a row. So that's positive that some of the Fed tightening is working. The PPI also was up a little bit at 2.3%, but lower than in the past. So hopefully we're trending in the right direction on inflation. That's certainly been a topic for quite some time, and I'm trying to get past that. FDIC is trying to replenish their amounts that they've had to use in the insurance funds. They're going to charge banks higher amounts for that to try to put money back in there. We've had a labor market that does seem to be cooling off a little bit. It's been really tight and a really hot labor market, but some of the signs on layoffs and the labor reports last week showed maybe some signs that's cooling off just a little bit. And home prices have been continuing to fall a little bit, as we would expect with rising interest rates. So a lot going on still to be figured out. Are we going to be able to navigate a soft landing and avoid a recession? We'll have to wait and see more Fed action. They did raise rates slightly, another quarter of a point recently, and speculation that maybe that's it. But we'll have to wait and see how that goes. So give us a call if you have any questions about your accounts or about anything going on. Again, we've still got some pretty good fixed rates out there on some things. So talk to your advisor if you have any questions about that. And I hope everyone has a wonderful week. Thanks.